I hope you're all well and you're staying warm. In this video, I'm going to be discussing what I see as a large tsunami coming in the not so distant future for auto loan borrowers. And also, what can happen if you don't do this very simple thing from the finance office. Now, you probably already know that student loan repayments resumed in October. However, according to TransUnion, 36% of consumers with student loans took on automotive loans as well as other debt during their payment moratorium. If you've watched the prices of vehicles over the past 3 to 4 years, then you have felt that jolt of utter sticker shock come over you, but there's a new shock on the horizon. Liz Pagel, Senior VP and Consumer Lending Business Leader at TransUnion, said, "The majority of consumers with student loans have not been required to make payments for the better part of 3 years. Payment amounts will vary, but many of these consumers have taken on additional debt since the last time they've had to pay their student loans. It's important for both lenders and consumers to be prepared for what she calls the new payment shock." Sidecar: if you live in some areas of New York, you can look forward to the new congestion pricing. New York City's plan to make money off of all cars on the road. Jerry, a digital insurance broker, found in a December survey that 28% of Gen Z respondents said that they were more than 30 days late on a debt or rent payment because of the cost of car ownership. Now, the severity of a missed payment will depend on how late it is and how often you tend to miss payments. The later it is, the more detrimental its impact. But even so, if you have a 780 credit score and you've never missed a payment before, just one payment that's 30 days late could drop your score by 90 to 110 points. Now, the Department of Education has directed loan servicers to not report late payments to the credit bureaus until September 30th of this year. And because of this, missed payments will not immediately impact a borrower's credit score. So many feel that for the next year, it doesn't matter with respect to their credit score or FICO score. Now, borrowers may be tempted to skip student loan payments and instead spend their money on other things, which might be something that they've grown accustomed to. But obviously, doing that could really ding their credit score, and it did prompt the current administration to issue a warning in a letter to credit reporting agencies not to do that. Instead, the companies should exhibit some grace to 28 million borrowers, considering the extenuating circumstances of restarting loan payments after a more than 3-year pause. The administration is concerned that things like servicing errors and other factors could impact the accuracy of credit models and consumer data about borrowers during the current special circumstances of the return to payment. But be aware that interest will still accrue and balances will still increase because of it. That growing balance is something that can depress your credit score and your DTI, or your debt-to-income ratio. And you will always hear me say that getting a car loan is not just about a credit score, it's the entire picture. The most heavily weighted factor in your credit score is your payment history. That makes up 35% of your score, so missing and having late payments can have a significant negative impact. It's also why one of the best things that you can do for your credit is to pay those credit reporting bills, like your student loans, on time and in full every month. So, with a rise in delinquencies comes a rise in repossessions. The AutoWire reported that lenders seem to be going after non-payers with unexpected gusto, offering incentives for repossessions. For example, it was reported that Wells Fargo is giving repossession agencies an extra $500 per vehicle to rope in car owners who have strayed off the payment path. I recently read that they have extended that incentive until January 31st. Exeter and Santander subprime lenders were offering incentives as well, but then pulled them back. Cox Automotive estimates that 1.5 million vehicles will be seized this year, up from 1.2 million in the previous year. I personally think it's just going to continue to grow. While this figure is still below pandemic levels, it does reflect the financial strain that is faced by many car owners. Sidecar: after you pay your student loans off, You might be surprised to find that your credit score drops a bit after paying off the loan. Once the account is closed and no longer active, the positive payment history won't contribute to your score as significantly. However, the impact of paying off a loan will still be beneficial in the long run, and it shows lenders that you held up your end of the lending agreement. Plus, you'll have more income available to put towards reducing other debts, which will help your debt-to-income ratio. Now, the fact that so many people did buy at the height of pricing with forced front-end ads and high additional dealer markups, combined with the rising DTI, debt-to-income, and/or student loans kicking back in, even if lenders ease their guidelines and manufacturers roll out more incentives, I predict that there's going to be an influx of people that won't be able to get into another loan if they had to. It would be very, very helpful to see actual car prices drop. Now, no matter what the market is, people are always surprised whenever they get a trade allowance number from the dealership. But they're going to be even more so the next time around whenever they go to trade. Always do your trade-in research before you head into the dealership. There are many online resources to do this. Edmunds has a value calculator. CarEdge has a black book, which is really great. Plug in your VIN into CarMax or Carvana and get their values too, but this is something to be armed with ahead of time so that when it's time to introduce your trade, you're ahead of the game. And make sure that you check to see if your state has trade-in tax credit as well. So in my opinion, the combination of higher debt-to-income ratios, lowered credit scores, along with lower down payment savings and trade-ins that are underwater, along with other factors, could create a large demographic of unqualified buyers. Now, switching gears. Every single week, I talk to people about their deals, and here's a scenario with a common thread. Kimberly, I think they charged me for an extended warranty without telling me. Okay, let's take a look at your paperwork. Well, they didn't give me any. Or, Kimberly, could I have gotten a lower interest rate? Well, what rate did you get? I think it was around 10%. You think? All right, let's take a look at your paperwork. Well, I don't have any paperwork. Do you get my drift here? So there are a lot of great compliant dealerships out there that do things the right way, and I'm not talking about them. There are always ongoing lawsuits out there that revolve around contradicting paperwork. Amy, for example, she purchased a brand new car and ended up having to retain a law firm to figure things out for her. They eventually settled with the dealership for a large sum of money, but a long story short, had she not found her copies of her original signed paperwork, it might not have worked out in her favor. Amy was stressed from all of this and did not want to go through the years that it could have taken, as well as the money to invest in litigation. There's a lawsuit happening right now with an Ohio Kia dealership where a customer claims that her signature was forged on her niece's sales and financing documents. And here's one from Charlotte, North Carolina, where a man and his wife say that they signed the paperwork, but the dealer did not give them copies of the documents. He says that the business gave him a sales contract several days later, one he and his wife hadn't seen before. And this contract listed a higher interest rate and expenses that they said they didn't agree to, like gap insurance. They also claim that someone forged their signature on the form. Always, always be sure that you get a copy of every single document that you sign and put them in a safe place where all your other important paperwork is. Now, I would like for you to keep your own paper trail, and here are 10 very important documents from the dealership finance office. And if by the end of this video you feel like you got just a little knowledge out of it from this or any of my other videos, would you mind clicking that free like, subscribe, and notification bell for me? It means so much, and thank you. All right, number one, and you already know this, your purchase order. When is the best time to see this document, the purchase order? You can request to see this right after you've agreed upon the out-the-door price, the OTD, with all the firmed up fees, and typically this is something that the finance manager will need to print out. I like to see this first because everything is itemized out for you rather than just printed out on a worksheet or worse, scribbled with a Sharpie. Number 2, if you're financing your bank contract, set the bank contract and your purchase order side by side. If you're working on a tablet, have the finance manager print them out if you want. Yes, just because you're working on a tablet does not mean that you can't have paper copies. Make sure the bottom line of the bank contract matches the bottom line of the purchase order and ask if there's any prepayment penalty to this loan. If at that time the finance manager says that you have to keep this loan for a certain period of time, like 90 days or 6 months or whatever it is, then be sure to have him or her circle and highlight exactly where it spells that out on the bank contract. Many times you're backing them into a corner because they simply don't want a chargeback. Number 3, the WEO. This originated from the need to protect both dealerships and customers from making false claims on a car sale and get stuck in a he said, she said scenario. Always be sure to walk around and physically go over your new vehicle first. If there's a scratch or something that needs fixed, then you want to make sure that that's on your WEO. Number 4, product contracts. They spell out all the terms as well as the price that you agreed to on any additional products that you want. Number 5, declinations and opt-in disclosures in case any questions ever arise as to whether you agreed on additional products or not. Number 6, the odometer statements. Make sure that they match both your trade-in vehicle and your new car as well as all the other paperwork that you're signing. Number 7, the completed and signed CPO inspection checklist. I always say it is not a certified pre-owned vehicle until you, the buyer, have proof that it is a certified pre-owned vehicle. And there have been many drug-out lawsuits and cases involving this very issue. Here is an example of what I'm talking about. You want to make sure that this is signed by the technician that performed the inspection for the CPO, by a sales manager or the finance manager, and by yourself. Number 8, if you're buying a used vehicle, make sure that you get a copy of the used car buyer's guide. Now, this buyer's guide must be given to the buyer at the sale. The buyer's guide is a sticker that is required to be displayed on the car's window. It might include terms like as is, no warranty, or implied warranties only, or description of any warranty offered by the seller. The buyer's guide must also disclose the percentage of parts and labor coverage, a time or mileage limitation, and the major components it covers. Dealers also have the option of disclosing the balance of the remaining original factory warranty on a vehicle. And number 9, your completed credit application with your signature on it. You never know what could happen, and you want this as a very important part of your paper trail. And number 10, going back to where you started, be sure you have a copy of your final and signed worksheet from where you began. Again, you're creating a paper trail, and this is your jumping off point, so keep it in a file with the rest of your copies. I know to some this may sound tedious or like a pain in the neck to do, but cover yourself. Keeping a paper trail is not difficult, and I'm always surprised at how many people out there tell me they just don't have their paperwork. Now, I just want to let you know that I have been working behind the scenes on putting something together to help you out. I do hope you got a little something out of this video, and please feel free to check out the other videos I have as well. Have a wonderful rest of your day, and I will see you soon. Bye-bye.